actually already out for TCS. So let me take it from there and talk to you about the numbers, because the profitability has come in better than expected at 12,430 crores. Even if the revenue is pretty much in line with expectations, I have the operating revenue number which is coming at 61,200 crores, and that's bang in line with what we were expecting. In fact, a smidge below, if I have to call it that. But overall, the profitability figure tells you that perhaps on an operating basis, the performance has been better, and that's why the company has managed to beat the expectations on the profit front. Overall, the street was expecting that there's going to be 1.5% kind of growth on the company's top line. They have managed to largely deliver that number. The profitability, of course, has come in better than expectations. The expectations were fairly wide, right? From 11,900 crores all the way to around 12,000 crores is what the expectation was, and the number has actually come in between that, and that explains why the stock pretty much ended at the high point of the trading session. It was, earlier a bit somber, but by the end of the day, it managed to cross that mark of around 4,000 crores as well. In terms of the valuations, however, the stock is not very cheap, to be honest. We have seen that the prices had actually run up this year, and that's the reason the price equity multiple had actually moved on to 28 times. So overall, the number, at least the frontline number that I have right now, seems impressive on the bottom line, because other income hasn't actually gone up. The taxes have also been pretty much on a steady basis. So I'm not seeing any big reason why there would be a big beat, apart from the fact that the operational performance seems to be better, and that's the reason we have seen that uptick come by. The profitability is concerned, I think we're still waiting by for the numbers as far as margins are concerned, as well as what the constant currency growth is. But if it is any to go by as far as the first number is concerned, it looks like it's an impressive set. We'll try and get more analysts to talk to us about how the numbers actually fare up versus the expectation, because as I pointed out, overall expectations from the sector were fairly muted. The street is expecting that perhaps it's going to be a high single-digit kind of growth that the companies would deliver in the coming year. Nobody's talking about a double-digit growth. So whether it's going to be, say, 7 to 9% or 3 to 5%, those are the kind of questions that is asking. Initial signs have been a bit more positive. Yes, furloughs have come off, and the fact that BFSI has taken up, those are some of the factors which give heart to the factors that perhaps the worst is over for the IT companies. But for now, we are not seeing any any commentary such to tell you whether that has happened or not. So the first numbers that we have on revenue, which is a smidge below, but I'll call it largely in line. Profitability has come better at around 12,500 crores, and of course we'll wait by for more details in terms of the press details to come by to talk to us about how the numbers really look. But for now, it looks like a decent set, the first two set of numbers.
In fact, Nisha, what we saw was that there were expectations that there can be market expansion because there was no major wage hikes. In fact, there was a higher efficiency what Street was expecting. So let's wait for more numbers, for more details to come in. But then in the meantime, we do have experts. We have Rajesh Palvia, Head of Technical and Derivative, to talk on. Okay, Anisha, we have Sandeep Agrawal.
Yes, so let's take it forward and bring Sandeep Agrawal on the phone to talk to us about the numbers. Sandeep, I think we just the initial numbers coming in, 12,300 odd crores on the bottom line, 61,200 on the top line. Don't have too much details to give to you at the moment, but with these first numbers, what will be your initial sense?
No, it is, I would like to still see little bit number on the dollar side. I don't think they have yet come, so looks very difficult to comment. But, what was the revenue number you have told it has come?
130, that's the first number that I have as far as the rupee revenue is concerned. And dollar revenue, I'm just trying to open, but why don't you begin with the rupee revenue first?
No, I have not yet the rupee revenue.
61,237. 61,237. Okay, let me just fill you in with a few more details since I have the number. The FY24 order book now stands at $42.7 billion. The Q4 TCV was a solid $13.2 billion. So that's a very strong number coming in. The operating margin is a tad bit lower, 24.6%, because we were working with a number of around 25%. That seems to have ebbed off a bit. Growth has been led by India, which was high by around 38%. UK stood out quite well. And take a look at the constant currency number. On a year-on-year basis, it seems like it's 2.2%, because they haven't mentioned whether it's quarter year-on-year, but looks like the number which stands out is 2.2% on a year-on-year basis. And the revenue has come in at $7.36 billion, which means around $7,300 million. Would you say it's a beat?
I think revenue number are in line, but the order book number is very substantially good. And even the margins, I am not negatively surprised because, they vary 20, 30 bits, and I don't think it is, varying more than 20, 30 bits versus the estimate. So I wouldn't read much in the margin numbers, but I would rather say that the order book number is the one to look, as have said in the earlier interview also the day, that this is the quarter when you should look at the guidance and the order book, because now things will open up for the current year, as last few quarters have been little challenging, but the outlook, as the companies mentioned earlier, also looks more interesting and exciting.
Yeah, just stand correct on the margin figure, because the operating margin has come in at 26%. The earlier margin of 24.6% is perhaps the full year number that the company has given. So all in all, it's a beat on the top line, largely because the dollar revenue has been good. The margin are actually a big surprise, 26%. Nobody on the street was expecting a 26-digit number. Everybody was between 25 to 25.3%. And the TCV number of $13.2 billion is pretty much out of the park, because people were expecting maybe $7 to $9 billion led by the Aviva. This is much stronger than that. And even if you look at the bottom line figure, it's managed to beat the expectations as well. In terms of the verticals, it seems like it's energy which has done well, and overall in terms of the other details as well, which is coming in terms of the commentary, K. Krithivasan says that we ended the FY24 year on a strong note. The operating margin is strong, and we are staying close to the customers and helping them execute to their core priorities. Even N. Ganpati is talking about similar lines coming in with the stellar growth that they have reported this quarter. Samir is quite excited about the long-term investment that they've made in workforce reskilling as well. But talking about the certain sectors, BFSI has managed to degrow yet again, Sandeep. BFSI is down 1%, while manufacturing again has stood out with a 7% gain.
If you like this video, then like, share and subscribe to ET Now.